Happy Friday, everyone. Thanks for joining me. It's 8:03 a.m. Chicago time on Friday, a rainy, dark, gloomy Friday here. It is the 7th of October, 2022, NFP Day. This is the non-farm payrolls this morning. Market basically tanked on that quite a bit with some interesting structure left behind in most of the products. This is episode number 2331. Caution, I'm losing my voice. Who knows what it'll sound like next week? It'll probably sound like a broken whistle. Yeah, it's 2,331 episodes now. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick note, administrative. I will not be covering the prior day, what I said, all this stuff. I will cover the prior day in terms of context alone. I need to move on and talk about today and what's expected for today. This is what most of you are likely here for anyway, because I need to shorten the trader bite because there's some interesting stuff happening next week that I'm doing that I'm really excited about. Doing it with Edge Clear. It's an event. It's an event. I won't say too much, but it's an event that launches on Monday with a live cast with Ian Blanky of Edge Clear. We'll be talking about a specific thing and making an announcement, and it's a challenge for everybody. And so I want to reserve it for that. But 1 o'clock on Monday, I'll put that up again. The information on it is at the top of the YouTube chat, live chat. It's pinned at the top. You can set a reminder within YouTube to attend live or catch it later. But in any case, these trader bites are going to be shortened quite a bit. Working on that. Because there's something else that I want to do with the additional time that I gained back this morning. Risk off sentiment. The Nasdaq's getting whacked, and the market overall was holding steady. It had dipped below the prior days. Low. And basically was holding steady, and it looked like we were setting up on almost like an inverted head and shoulder. It looked like we were ready to rally, and then the number came out at 263. Was it? Came out at 263,000 versus 250,000 expected, and the market just tanked. The Fed funds futures, the Fed watch is showing that the probabilities of a 75 basis point hike are quite high. They were at 77%. They jumped up to about 81% right after the number. So that's what the market's responding to, as it says there in the notes. U.S. payrolls comes out at 263 versus 250K expected. Market sees interest rate hike risk. Earnings kick off next Friday, so that's going to be another one. AMD and others came out and said they're just not going to meet expectations for chip sales. And so the NASDAQ is weak, chip market getting beat up. And what's left for today is wholesale inventories. There's a speech by Feds Williams, and then the CakeGen Composite and Services PMI this evening at 9:45 out of China. And that's that. The S&P multi-distribution profile this morning, it was actually a balanced profile until we broke down, and now it looks like a P shape, but I caution you, for those who've been listening, a P shape isn't formed by the market being in balance and then falling to form the leg of a P. It's a market that starts at the low, rejects the lows, and imbalances at the high. So that's not explained very well by others who talk market profile shapes and volume profile shapes. But remember, this is really not a P-shaped profile. It's a multi-distribution profile. The volume's 391,000, so relatively heavy volume, which is expected. for non-farm payrolls, and the range is 70 points this morning, with the point of control remaining at 37.5550. Yesterday's low is right there at 37.5050. So the balance for the overnight session remains at the high there, a little bit higher there, while the market is selling off. So that's what we've got. Let's shift gears now and look at the overall picture. So top to bottom, what do we got? We have crude that's very strong and will continue to be so. So this is yesterday exactly as expected. I spoke yesterday about the fact that we are opening inside of a 2-day balance. We're very likely to create a 3rd-day balance. We're coming into non-farm payrolls yesterday into today. And so there's really very little incentive to go and put on a position or to take a view on the market and bet with that. So yesterday was expected to be choppy, expected to be balanced. And look at that profile. That is a balanced profile right there. It ended up closing weak yesterday. So expected some trickle down into the overnight session to test the low of this low at 35, the low of 2 days ago of Wednesday. But we got another profile that's overlapping exactly as expected. So what we've done is we've consolidated down here quite a bit. Then we popped in a gap. We had an imbalance. And then we finished very strong. The next day, however, opened down here, tested down, tested up, and finished inside of the prior day's value, telling us that despite the fact that we popped up, we don't have any follow-through. So the following day actually tested the high, above the high, and below the low, and finished in the middle. This is very neutral territory. And it's telling us that the buyers cannot move price higher, that the sellers are active enough to hold buyers down. And so the market is accepting these prices. That's what it's saying. And then yesterday opens right in the middle of that 2-day balance. So this may be a better chart to look at, my composite chart. So we open in that 2 days of balance. Let me change my... So we opened in this 2-day balance. So that was Tuesday, Wednesday. And we opened right in the middle of it, right there. And we created this balance. And now we are into, we are below, we've skipped the gap that was here. And we're into this big composite, right? This composite that started September 25th, which is all of those days that I just showed that are overlapping. We're right in the middle of that. And so the target here is that 36.96 that I talked about. We stopped at 3,700 this morning. So it's really, I'm not here to say I told you so, but very, very much what was expected. I mean, if we gap up and then we're not able to get a follow-through day on what looked like a trend day on Tuesday it was, and we suddenly pause like that with the day checking the top and the bottom and ending up somewhere in the middle. This is not a good position for longs to be in, and that's what we're seeing here. And now with the non-farm payrolls being stronger, creating interest rate risk and so on, the market's responding by selling off, and the fact is we left some weak structures below us with the gap. So now we're back inside of this balance. And so what does that mean? The expectation here is this is balanced. So we expect this value area to be tested and to hold early on. Guess where we are right now? We're trading 37.16, the value high of this micro composite is 37.16. And the point of control is 36.96, and we have not tested that yet. So my expectation is if we're likely to bounce from here before the open, likely to rebalance the position of the market before the open. But the expectation is we check the 3,700, and then we break into the 36.96. We're likely to because that's the balance, the big balance of the multi-distribution profiles, I expect price to get trapped there today. So I'm expecting today to have action in the first hour and a half, and I expect it to just get stuck, get trapped in the tall grass, spin its wheels all day long. So this is one of those days where we have a very short, we're likely to have, because I can't know the future, I would love to, we're likely to have a very short period of time where we can act and get something on our runner, some distance on our trade before the market goes into a chop zone, which leads us into Monday, which is likely to be a very slow day. There's not much that the market is likely to price in come Monday. We have some numbers on Monday. We have a bunch of numbers out of Australia at night, but Monday, just a bunch of speakers. Brainerd, Evans. We have ECB's Lane early in the day. Monday's likely to be a very, very slow day. And so this morning, I'm expecting this thing. It's right here now, right against value high. I'm expecting it to chop, make an attempt. I expect responsive buyers to come in and try to bring price to where it was most recently, back into balance. That's the primary expectation. Is when we gap, we're looking for the market to respond. And if it doesn't respond, gap rules say we trade with the gap, and that is on the short side because we're gapping down. And in that case, we're targeting the 96. And then after that, we're looking at the template day. So we're going to switch this chart right here. So the template day would be this day right here. And we're looking at this day, and we're looking for areas that the market is likely to respond. And you can see those as stock zones on here, those faint gray areas, so 76-ish. And then we have the 70 here as a naked point of control. So this morning, what am I expecting? Let's just get to that. What am I expecting? We've already sold off. We have an impulse pullback. Look at that. The mid. Woo. Pullback to the mid continuation. Very beautiful pattern, very common pattern. We have an impulse continuation down. We're reopening, and I'm expecting this thing to respond. So what's my primary scenario? My primary scenario, we're in the gap now, expecting it to respond back in and towards this 35 area from a couple of days ago. Expecting it to stall out. That's where VWAP mid will be. Expecting it to stall out and move to close the gap, which is at 12. And now we're inside of the value area of that composite. Expecting it to push through to 96. Bounce, get back above 3,700, fight the 3,700, and then potentially push down into this naked point of control at 70, and then stall out, and then spend the rest of the session right in here. This is my expectation today. This brings us back into the lower balance. This is going to put the bulls and people who called for a low, it's going to force them to be defensive, so more selling or hedging, and we're likely to close here. Again, Monday is expected to be pretty boring. So I'm just warning you now. So if you need to go see your doctor or something, Monday's probably a good day to do that. Secondary is one where we get initiative movement. The market responds pretty dramatically on the open, pushes through the 3,700, a little jigger at the 3,700, 96, comes back to the 3,700 and moves below the 3,700 into 96, and then pulls back up and then consolidates in this dead zone here between 37.50 and 35. 35 up here. And it holds steady. This is actually pretty good for the longs here, for the bulls, because it is basically repairing structure, coming down, testing the composite balance, where the market actually accepted prices and then broke higher. It's testing it, and then now we're building a pretty decent foundation from which we can launch higher. But the earnings season in Q4 is expected to be pretty bad. Maybe the market will be surprised, but this actually sets up a pretty decent base. If we close, even though we don't close today's gap, if we close above this 35, between the 35 and the 50 today, this really sets up a drift higher into Monday and pushes us back into where the buyers are more easily going to be able to push sellers, the shorts out. The SOC for non-farm payrolls was 37.58. 37.58. So we have a price up here somewhere. Where's the 37.58? Somewhere here, I guess. We have a price up here that we're likely to revisit, the SOC. See, I'm losing my voice at 58. So that's a magnet there. But gap rules today. Gap rules apply. We're opening in a gap. We're in between two key areas. We want to see how the market responds early on. Very important to see how the market responds. If it's very weak, pushing back or responding higher or buying up on the open, if it's very weak doing that, then we're going to be trading from the short side. And again, our target's 3,700 for the overnight stat, and then pushing lower into 96 as a key target. Okay? Thank you for this spam. I'm sure everybody would love to join your porn, whatever it is, nonsense. People respond so well to this kind of advertising. Sorry about that. Anyway, I want to remind you to sign up for Monday's event. There's going to be an announcement that involves you on Monday. There's not like some way to sign up. All you're doing is following the link. It's myedge, myed.ge/hit-or-miss. We're going to be talking about event contracts, and we're going to use those in a way to support something that I'm passionate about. So we'll make that announcement on Monday, October 10th at 1 p.m. Join us to be a part of this conversation, to ask questions, and to hear what we are planning. Okay, should be pretty cool. I'll catch you on Monday morning, and I'll definitely catch you at 1 p.m. Take care.